I think Bitcoin is mistaken as a risk-on asset. I think the reality is Bitcoin, the utility Bitcoin serves to the world today is a global macro smoke alarm for global liquidity and risk. And so if on a Sunday night, the president of the United States is going to say, I might run for a third term, and then say, I'm thinking about stronger, harder, broader, all of these overpowering bully words for tariffs, Bitcoin's going to sell off. It's the only 24/7 global free market in the world where you can express a concern about macroeconomic, geopolitical relationships, about global liquidity. On a Sunday night, where else would you have been able to express a concern about what the president of the United States said? Think about that for a second. Global, free, accessible market that is the macro smoke alarm for global liquidity today. Bitcoin led the S&P 500 down. Bitcoin moves first. It's free. It's global. It's accessible. So why is Bitcoin down? Because of macro, because of Trump, because of tariffs. I expect a lot more volatility. We've said it over and over and over and over on this show. Volatility in the near term, bullish in the medium to longer term. We're still right in the thick of the volatility. Markets do not like uncertainty. They're going to freak out. They're going to sell off. And also, by the way, if you look at gold and how gold's trading, I mean, something is up. Something is up. Markets are calling bullshit. Markets are scared. Supposedly, we're getting clarity on tariffs and the policy on April 2nd, and markets are trying to price that in. Are they pricing in too much downside? Are tariffs going to be light? Is Bitcoin going to pop? Maybe. Is Trump going to be aggressive? Is he not only negotiating, but he's going to act this time? Maybe. Nobody knows. So I expect a lot of volatility. It's tariff week. Bitcoin is a global macro smoke alarm. Think about it. People say Bitcoin has no utility. What other monetary network can anyone in the world express concerns about what the president of the United States said on a Sunday night? The answer is zero. There's no such other useful asset, useful monetary network that provides you that level of utility. Extraordinarily useful. That's why it leads itself on the way down. It leads the world on the way up. Now, what I wanted to bring to your attention. So listen, my opener there, Bitcoin's volatile. It's volatile for obvious reasons, because the world is volatile, because Trump and this administration have been volatile. Policies are unclear. They've been in office for 8-9 weeks now. They're rushing policy. They're trying to front load a lot of the pain. They're purposefully engineering uncertainty. They're purposefully engineering intimidation tactics. All of this is expected. Bitcoin's going to be volatile. Bitcoin's going to trade down if the world is scared. Just a fact. Okay. What I wanted to bring to your guys' attention is what the Fed has been issuing. Because I really want to continue to build conviction in my medium to long-term thesis that Bitcoin's going to hundreds of thousands of dollars per coin this year. Okay. Just to remind everyone, or for those new listening to the show, my opinion, you take it for what it is. You could disagree. You could hate it. I don't give a fuck. You could agree with it. You could use it. I don't give a fuck. It's just my opinion. My opinion is that easy monetary policy is around the corner. I think the aggression and the front loading of pain is because there is a lot of money to refinance over the next 12 months. The US government has to roll over $10 trillion. April's their biggest month, when Treasury Besant's saying the 10 years got to come down. 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 You guys want to know why the 10 year has to come down? The 10 years got to come down because they're in so much debt. And so they're pushing. Can we get rates down? Can we get the 10-year down? Can we get rates down? Can we get the 10-year down? Think about it logically, guys. If you had to refinance $10 trillion, you'd probably want as low a rate as you could possibly get. You want easy borrowing conditions. You want easy monetary conditions. I want to show you guys a Bloomberg headline titled, "The Fed is urged to mull a hedge fund bailout facility for basis trades." Okay. As we talked about last week, the Federal Reserve came out and said they were slowing down QT, quantitative tightening. And they're starting to flirt with this roadmap of slowing down quantitative tightening to stopping it, and then picking up quantitative easing. Now, they haven't said that explicitly, but what the Fed is masterful at always is doing QE, not QE. Not technically quantitative easing, but actually quantitative easing. And so after that Fed meeting with Jerome Powell, where he said, we're going to stop QT, all eyes were on, was he going to flash any signs for QE, not QE? Was he going to start putting things out in the media and flirting with the idea of getting more liquidity out there? Okay. Stock market's getting crushed. Assets are getting crushed like Bitcoin. These guys are desperately trying to get the 10-year down so that they can issue at the long end, they can refinance all this money, and then juice this thing to the moon. Okay? It's been my prediction. It's playing out. Still my prediction. Now, this headline, let me download it and share my screen with you guys. So I'll read it for those listening on the podcast waves. But for those watching on YouTube, I want you guys to be able to see this Bloomberg screenshot here. Hold on. Best podcast producer you've ever met. Me. Just bear with me for a second. All right. Share. This is what I want to share. Can you guys see my screen here? Let me zoom in and we'll scroll through it together. Fed urged to mull a hedge fund bailout facility for basis trades. Summary by Bloomberg AI. A panel of financial experts suggests the Federal Reserve should set up an emergency program to close out highly leveraged hedge fund trades in the event of a crisis in the $29 trillion U.S. Treasuries market. The program would involve hedge bond purchases, which would allow the Fed to intervene in the market without removing, quote, duration, end quote, from the Treasuries market and blurring the line between financial stability operations and monetary policy. The proposed basis purchase facility would involve auctions of bundled basis packages, allowing the Fed to set a minimum bid price and limiting moral hazard, and would be a more elegant solution than outright purchases of treasuries. Okay. The reason I want to share this with you guys is what followed Jerome's last meeting of saying he's going to slow down quantitative tightening was immediately issuing out these press releases and putting out feelers of QE, not QE. Everybody knows who has been the buyer of treasuries recently. Have been these basis trade hedge funds. When you ask yourself, who the hell is buying treasuries right now if it's not China? Tether and these hedge funds. That's the truth. And putting out a feeler of like, we really need these hedge funds to keep buying. What if they blow up? Can we bail them out? Is everyone cool with that? By the way, the Fed's never going to put their name on this. The Fed is urged, suggested by really smart, established economists. The Fed's never going to say, this is our idea. What's going to happen is established economists and market participants are going to urge the Fed to consider something. And this is what they do. They're putting out feelers. Guys, what have we said? The market doesn't like uncertainty. And so the Fed's never going to surprise the market. Ever. Doesn't want to catch anyone offside. The whole point is to build trust in the market. They want you to They want to be reliable. They want you to trust them. And so they're going to put out these feelers. They're going to telegraph exactly where they're going. And I just wanted to share this. It is very obvious to me that the Fed has gone from, Jerome Powell's gone from, I'm fighting inflation. I have a job to do. Trump, get the fuck out of here. I don't care about what you have to say or what you care about. I'm here to do my job, which is an independent bank. Boy, has that changed, hasn't it? That changed quick, didn't it? To, let's slow down QT. Wait, someone just urged us to mull hedge fund bailout facility for the $30 trillion treasuries market. Is everyone cool with that? We going to get any backlash? Anyone want to give me a phone call and let me know why that would be a really bad idea? Because if not, so I continue to believe, I mean, another one was Besant saying that right now banks are restricted in how much they can purchase in the treasuries market, which is true. So the story here is, after the 2008 financial crisis, there was regulation introduced, which in my opinion was fairly logical, which is, as a bank, you cannot use unlimited leverage to ape into positions. You have to post some collateral, some leverage, some collateral to get leverage in order to buy things like treasuries. And that's reasonable, right? Like, banks shouldn't have unlimited buying power for something like treasuries. However, the problem with that is when there is no unlimited buying of treasuries, there's no unlimited amount of demand for US debt. And so Secretary Besant has made comments saying banks have limitations on how many treasuries they can buy. We're looking into getting rid of that, basically untethering them again from needing to post any sense of collateral and having unlimited leverage and being an unbounded buyer of US debt. And so I just want everyone right now, there's tariffs, Trump's third term, blah, 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 and everything's volatile. I say all the time, markets either scare you out or wear you out. They're either going to scare you out. They're going to take the seat right from under you. It's going to make your stomach drop and turn. You're going to wake up. Your portfolio's down 10%. You're going to want to cry. That's scaring you out. Wearing you out is, man, it's taken months, week after week after week. This market's not moving. I thought we were going to the moon. I'm exhausted hearing about tariffs and Trump and strategic Bitcoin stockpiles and sale. Or, man, is this thing ever going to move? Scare you out or wear you out? Scare you out or wear you out? The bigger picture is starting to unfold before your very eyes. Fed urged to mull a hedge fund bailout facility for basis trades. The Secretary of the U.S. Treasury is saying we need to uncap the amount of leverage that banks are willing to take on to buy treasuries. Really, really, really big deal. I continue to say, I think all-time highs within the next few months, within Q2, within this quarter. And I think hundreds of thousands of dollars before the year's over. Obviously, there could be black swan event, recession. I really do not think that this administration can afford that. I don't think that these deficits can afford that. There's only one way out. It's through currency debasement. Elon, the amount of fraud Elon is rifling out and the amount of spend he's cutting is really calling the hand of Besant and Powell. They need to act quickly if they're going to land this plane safely. And you're just starting to see, and when I saw this press release, I grinned from ear to ear. I mean, the dollar is going down so far. They're urged to mull a hedge fund bailout facility for basis trades. I mean, just the first $29 trillion U.S. Treasuries market. That's the only number in this press release. $29 trillion U.S. Treasuries market. So anyway, In my opinion, this is a pretty flat week. This is definitely the scare you out, wear you out time. You got to hold your convictions. You got to stay humble. You got to stack sats. My message this week is pretty short, but pretty simple. It's that I'm starting to see the signs from financial authorities that easy monetary policy is coming and that they're going to print the shit out of the dollar.